Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Tesla report for Tuesday, January 16th, 2024.
But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever.
On with the charts. Start with the big picture. We'll work our way into the day itself as usual. It was 3-4 weeks ago that we tested what has been a targeted zone of long-term resistance that is now at 256.06. This descending channel top on the weekly chart goes back to the July high, 6-7 months in the making. Once tested, I mentioned how you should allow for the 177.73 channel bottom within 2 to 3 to 5 months or so of testing 256.06. Was not clearly indicated as an expected target, but was mentioned as attainable, and you should not discount the possibility of, and you can act on that. And so as we were testing this 256.06 channel top about 3 weeks ago, I mentioned how you might reach for 180 or 175 out of the money puts that don't expire for at least 6 months. And that is still the play, especially following last Friday's settlement below this combination rising channel bottom 2/3 speed line in the 224.33 to 225.64 region today. So we clearly settled below this, and I've been mentioning how if we were to do so, and we did last Friday, then we can expect the 178.65 channel bottom as a possible 3 to 5 week target. This could also take the better part of 2 months. I think what is realistic right now over the next 2 to 3 weeks is the 194.07 to 197.636 region. The low settlement price and the move low from late October is likely over the next 2 to 3 weeks or sooner, can contain weekly selling pressures. We may double bottom here for several weeks, which would put the 178.65 target as more of a 2 to 2 month objective. But I do think there's a clear possibility that by the end of February, we could unwind all the way back to the 178.65 channel bottom. This is considered an objective now. It was considered in reach, actionable sell signal perhaps when we were testing the 256.06 formation. So if you reach for those 175, 180 out of the money puts at that time, bravo. And now is the time where you can actually act on that with a little bit more certainty, as far as you can use the word certainty in technical analysis. But this is the template, having closed below 224.33, now anticipating 178.65, possibly by the end of February. So that is the big picture. Now for the day itself, there is this trend line that did contain last Friday's low, and you can't really ignore it. I'm not much of a trend line follower. I do like to use them, especially the long-term ones, for tradable levels on a daily or intraday basis. But in terms of identifying trend, I don't really use them as such. I do think what was critical was last Friday's settlement below this combination channel bottom speed line, 224.33 to 225.64. I consider this our ceiling now through the rest of January, below which we should fall to 194.07 over the next 2 to 3 weeks. 217.02, though, is still widely followed by many technicians who like to use trend lines, and so it has this sort of ability to contain intraday selling pressures. That's all I'm going to say about that. 217.02 able to contain intraday selling, and above which the 224.33 to 25.64 region remains in reach today, where we can top out into February through the rest of January, and below which the mid to upper 170s remain a 1 to 2 month downside objective. If we break 217.02 today, you should then anticipate 206.69 as a possible intraday target. Steeply descending 3-week channel bottom, well suited to contain daily selling pressures. All the minor points on the way down have, as usual, been carefully chosen. But I will say that breaking or opening below 217 217.02 today, you should allow 206.69 on an intraday basis. In fact, these are the day trade levels. 217.02, if opened above, able to contain intraday weakness, and above which 224.33 to 25.64 in reach, where we once again we can top out into February trade, and below which the mid 190s remain a 2 to 3 week target. If we break or open below 217.02, 206.69 becomes an intraday objective where we can place a daily low. Now, this is descending at a very steep pace, and by the end of the week actually converges with our 2 to 3 week objective anyway. And so I don't expect that today, but I will just mention that if we close today below 206.69, and that's a bit of a stretch, but if so, then we should actually test that 194. 07 to 197.36 region within the week, where we can double bottom on a weekly basis. Now, I have this weighted as a multi-week area, and I probably will reduce it over the next week or two. I regret not having changed it before I went to this video, but I'm so far into it right now, I'm not going to. 194.07 to 197.36, I will say, can contain weekly selling pressures. There is, of course, the possibility that we could bounce from here and within 2 to 3 weeks rally back into the mid to upper 220s. That is certainly a possibility, which I would consider to be yet another sell opportunity down eventually into the upper 170s. So bottom line, holding below the mid 220s, I am expecting the mid to upper 170s over the next couple of months. The question, of course, is what kind of a bounce and for how long can we expect it in the mid 190s, 194.07 to 197.36. Certainly closing below 194.07 over the next couple of weeks places this targeted 178.65 formation in reach within 1 to 2 weeks at the most, where we can bottom out on a quarterly basis, round back up to channel resistance perhaps within several months of testing the upper 170s. We could trade inside of this structure for months to come. And that is the downside, I think, pretty well. Now let's cover the upside. What if we close back above 225.64? Well, let's go to the intraday chart first, and I will mention that if we get a nice rally today, especially if we push or open Tuesday morning back above 225.64, we could test 235.11 within the day, where that's about as high as I would expect this market to get. First of all, I'm not expecting the market to push or open above 225.64, but it's going to do what it wants, and if it does push or open today above 225.64, 235.11 is, I'm going to say, likely, given the fact that we had such a meaningful sell signal below this area on Friday. Pushing back above it should spawn pretty aggressive short covering, I think, to 235.11 within the day, and I think that would be it for the day in terms of the upside, 235.11. But I will also tell you that if we do close today back above 225.64, that does neutralize last Friday's 1 to 2 month sell signal into the upper 170s, and we should then within the week reach 241.20. This would be a 3 to 5 day target. So 3 to 5 day swing traders, if we close back above 225.64, you can play the long side to 241.20. 3 to 5 day swing traders right now are playing the short side down into the mid to upper 190s. Not that I'm expecting that over the next 3 to 5 days, but it is certainly possible. If we do close back above 225.64, I do think it's realistic that within 2 to 3 weeks, we could rally back to the 256.06 long-term channel top. So yes, 241.20 expected within 3 to 5 days of closing back above 225.64 as shown here. But overall, if we close back above 225.64, and if you went short last Friday, having done so, whether that's for the next few days or for the next couple of months into the upper 170s, I will say for the next 2 to 3 weeks. If your time horizon is 2 to 3 weeks out typically on your trades, and you went short on Friday below this 224.33 area, my suggestion is to exit that if we close back above 225.64, preserve your capital, and you could even consider reversing and going long, because I do think the 2 to 3 week time frame does shift into a more more positive dynamic than anticipating a retest of the 256.06 channel top within 2 to 3 weeks, where we can once again top out through February into March and fall away again. And the last thing I will say, and that is the big picture, that if we can close above 256.06 at the end of this week, not going to happen, but above this structure over the coming weeks by a 1% margin, the second half or the rest of 24 looks pretty bullish. I would expect this 355.08 rising channel top. I was at one point saying 3 to 5 months when we were, a few weeks ago. But because this is rising and this is descending, that range becomes wider and wider over time. And I will say within, 3 to 5 months, that's a bit of a stretch, certainly possible. But I will say into the third, fourth quarter of this year, we should reach this rising channel top, which, by the way, by the middle of the year is already converging with the 414.49 November 21 all-time high. I'm going to leave it at that for Tuesday's Tesla. Please click like, share, subscribe. Check out wickedstocks.com for that 5-day free trial. You won't regret it. I'll be back tomorrow with Wednesday's Tesla report. You have a great day.